Hi everyone, so today I'm going to be doing a stock analysis video for a new company called AvePoint. So let's get right into it. I'm going to first share what they do, their quarter earnings, their most recent one, Simply Wall Street, Tipranks, all that. So let's get right into it, and we are going to take a look on how they're doing overall. So right now, AvePoint provides data management, governance, security compliance software primarily for Microsoft 365, SharePoint, Teams, OneDrive, and other cloud platforms, helping organizations simplify collaboration, protect data from breaches, ransomware, manage lifecycle, meet regulatory needs through backup, migration, and policy automation. They focus on securing the digital workplace, managing data from creation to archival, and making data AI ready for enterprises and public sector clients. So typically, as a lot of these, I found this company through Yahoo Finance in the software infrastructure, specifically in that industry. So you'll see a lot of the companies that I've covered in the past with Don, like Netscope, which is one of our more recent videos, and more or less so, they mostly do a lot of the same things. They're data management, security and compliance, data governance. So a lot of these things overlap most of the time. But this is unique because they do work with Microsoft 365. So I thought that was a little bit interesting of an edge that they have. But regardless, let's check their quarterly earnings to see how they're doing. And this is going to be for Q3. So just give me a second while I pull it up. And this is for Q3 of 2025. And this came out November 6th of 2025. So a little bit late in December that I'm covering it. And it was very good overall. So right now we have that their third quarter total revenue represented 24% year-over-year growth, which is excellent. And they had a total ARR of 390 million, or 26% year-over-year growth. So really just both two fantastic metrics to go by. You can't really complain there. And this has more details of it. So like I said, total revenue was up 24% from the third quarter 2024. So up from a year ago. Great. SaaS revenue was up 84 million, up 38% from the third quarter. Gross profit gross margin was also up as well. So overall, I think everything looked really, really good. You have operating income of 8.1 million compared to 7.7 million to the third quarter of last year. So again, good. Cash we're going to get into in a second, and cash from operations, again, we're going to get into a second. But another metric to go by with these software companies is ARR, which is a metric of recurring revenue. And again, this was up 26% year over year, which is really good to see in general. And yeah, I mean, there's nothing more to talk about here. Pretty much the story more or less ends on that one. Now, when we continue further and we check Simply Wall Street is going to paint a really great picture for us. So we have that it is currently 883 million, and in the next 3 years, it's going to be 123 million. So it's not quite a double. It is still growing, which is great. So that looks very nice. The financial health of the company, we're going to take a look at while it loads. Just bear with me. Okay, here we go. So the financial health of the company looks really good as well. Zero debt, a lot of cash, a lot of equity. So nothing to complain about here. Nothing further needs to be said. So really good on all fronts, honestly. We are going to next check my DCF. My DCF is going to say that's undervalued by 9%, which is great. Historical Wall Street forecast, it's still 9%, 13% for Wall Street, 9% for historical, but regardless, it's undervalued by 9 to 13%, which is great. However, Tipranks is going to say that it is actually undervalued by 37%, or there's 37% upside. And yes, this is Tipranks is a little bit different because I am using Interactive Brokers. You do get a free subscription to Tipranks when you use Interactive Brokers, so very good for that front. And Tipranks ratings, they have a strong buy, 9 buys, 2 hold, 37% upside. You have 4 days ago, this analyst with a 5-star rating was saying that he put a price target of 26, currently trading at, I think it's, $13 a share, $13.77 a share. Low is 16, average at 18.93. So I would say overall, this looks like a really solid company. I would keep it on your watch list, and we will definitely check for Q4 to see what's going on to get the current update. All right, thank you everyone. I appreciate it.